Hello everyone, it is Sunday, July 25th, and this is episode 23 of Odds Are, your S&P 500 weekly market forecast. Alright, so I know we're pretty late with this episode. I do apologize. Sometimes life happens and there are things that are out of our control, but we are still coming to you with this episode on this Sunday, and hopefully you guys are able to take advantage of some of this information. But as you will see, really nothing urgent or to act on for this coming week, and I'll explain a little bit more why. But as we always do, let's start off by taking a look at last week's numbers. All right, so you can see this nice V shape, big steep downward move and then straight up like a rocket. Now we did breach. In fact, we breached both breach points. We breached the 42.91 and the 43.61. And we did so with some strength, which we'll cover a little bit later as well. But the market went down, shot right back up, and actually closed outside of the upper settlement limit, which was at 43.90. So that's something that doesn't happen all the time. But again, we only have about a 79% chance to close within that range. So 21% of the time, well, that was last week. So we closed above the settlement range and came nowhere near the lower settlement or the parabolic SAR. All right, let's take a look at the moving averages. As we predicted, the market did not have enough upward momentum to undo the damage that had been done in the previous week. So we did flip to neutral on the short-term moving average, even with that strong end to the week. Everything else is still flashing green. And for next week, it's the opposite, right? So we're going into it with positive momentum. If we maintain that, then I would expect a short-term moving average to flip back to bullish. If we do not maintain it, we still may stay at neutral. And if the market continues to, if it goes back down with strength, then who knows? We may see a flip to a bearish. But my expectation on this one, I think we're going to stay neutral next week. I don't think we're going to have enough upward movement to flip it back to bullish quite yet, but could be wrong. Let's see. And let's now take a look at the breach points for this week. Very wide range here, right? So we're looking at a lower breach point of 42.81 and an upper breach point of 44.65. And that's because last week's movements, with the drastic move down and the big move back up, the big rebound, that provided a big range for the week, right? So this stretched out the expected range of the breach points for this coming week. Still showing an 81% chance that we will breach one of those two levels, but there are some things we need to consider additionally, which we'll cover here in a sec. All right, let's add in now the expected settlement range. So this is one of those things I'm saying we need to consider. The fact that the expected settlement range is only a point below the 42.81 breach point and is only 14 points above the expected the upper breach point, right? So the expected settlement range, 44.79 at the top, we don't have a lot of wiggle room here. And we have a lot of distance to cover to get to one of those breach points, only to then expect it to stay within the settlement range. So even though it's an 81% chance of a breach, I would not be surprised at all if we did not have a breach this week. Plenty of times we've had scenarios where we had no breach, then a breach, and then another week with no breach. So looking at this, I would say I feel more comfortable forecasting that we're going to stay within the expected settlement range than I do saying that we're going to breach one of those two levels. All right, let's add one of the parabolic SAR, and that's 41.91 this week. Again, we would have to close below that level for it to have any real significance. I don't see that happening unless we have some major turn of events and some things that really shift the markets to have a severe down week. All right, and now let's bring it all together. There we go. So there's that big wide range that I'm talking about, and you can see how the lower breach point and lower settlement limit are right on top of each other. Plenty of room to play with here. Looking at the red midline of the Bollinger Band range, we can go down, touch that, bounce back up. We can stay, we can push that upper Bollinger Band range a little bit higher. get some resistance, come back down, and still stay within that settlement range and not touch a breach point at all. The parabolic SAR down there in no man's land, and that is what we're looking at for this week. All right, didn't see that one coming. Well, if you didn't see this one coming, then you just did not watch the episode or just didn't believe me. Because last week we talked about how following a week where there was no breach point and where the market closed on a downward note below the central pivot point, we said that the odds not only was it the fact that the odds are 97% chance that we would have a breach, right? So if you didn't see that coming, I don't know what to tell you. But more importantly, that it wasn't going to be a minor breach. It wasn't going to be just coming up to it and crossing it by a couple of points, but that we were going to be expecting some breaches with some strength. And so we said that we were going to cross to 42.91 and it would do so with some strength. Well, we went all the way down to 42.53. And then on the top side, we turned back around and crossed the 43.61 upper breach point. And we said that we expected it to, go up to around 43.98. Well, the market did that and then some and went up to 44.08. So we got both of the things that we were forecasting. Not only did we breach breach the breach points, but we did so with strength on both ends. So again, if you didn't see that one coming, maybe you guys take some notes. All right, and now we're going to wrap up with our quote of the week, which is by Mr. Ray Dalio, the famous hedge fund billionaire from Bridgewater Associates. And Ray Dalio says, "To be effective, you must not let your need to be right be more important than your need to find out what is true." This is especially relevant to those people who are doing systematic trading, because if your goal is to have a system that is right all the time, then you are going to be wrong many times. That's the wrong approach, right? So you're not looking for something that is going to prove that you are smart or prove that you are right. You need to find out what's true. And even if that goes contrary to what you believe, even if that goes contrary to what you think is going to happen, it doesn't change the fact that it represents the truth. So for example, I could go on this show and say, you know what? The numbers say that we're going to have a 97% chance of a breach, and then turn around and say, I don't think it's going to breach at all. Well, that's kind of flying in the face of what the numbers are. The numbers reflect what is true, and what's true is that there's a tendency for markets to do certain things in certain scenarios. It doesn't matter if I'm trying to prove to myself to be right. What matters is that we're always in search of the truth. And for some of us, like myself, I believe that there's a lot of truth to be gleaned from the numbers, from the historical tendencies, from these patterns. And, it's not right all the time, but it gives us an edge. And hopefully you guys can all find that statistical edge or that thing that gives you a little bit of an advantage while you're trading, because it's going to make a huge difference in the long run. So with that in mind, enjoy the rest of your week, guys. Happy trading, and I will see you guys back here next Sunday.